Hi, Sue here from the Scott Properties Group. I've got the pleasure of being able to be with Luke Yu today of Heartwood Financial, based on the Sunshine Coast here in the beautiful Queensland hinterland. Thank you for joining us, Luke.
No worries.
Thank you. There's a lot going on in the financial planning arena at the moment, but one thing I would really like to ask, which is something that comes up, comments from our clients, is with the constant changes to the superannuation, is a self-managed fund, super fund, a viable option to hold direct property?
Yeah, look, it's a fantastic question. So obviously thanks for coming along and thanks to the viewers today. So as Sue alluded to, there are changes that are happening in self-managed superannuation world. In particular, and most notable would be the lending criteria, and now it is becoming a little bit more difficult to lend. Naturally, your mortgage broker can provide you a bit more information on that. But as for direct property inside self-managed super fund, I guess the important thing is to have a bit of a think about the purpose of superannuation in the first place, being that it's really there and designed to provide you with a safety net and income during your retirement. Now, whether or not direct property is going to be the specific asset class that you use to achieve that retirement goal is really going to be variable between different people. So what might work for one person might not be right for the other. Obviously, there's pros and cons when it comes to direct property. So what we'd always encourage is someone to come in and have a sit down with an advisor like myself and discuss some of those options, the costs of the self-managed super fund, both initially setting it up as well as operating it and running it. Not just the cost of operation, but the actual time involved in it as well. If you tick that box, then yes, we start having the conversation around direct property, and that's where you'd work with someone like Sue from Scott Properties regarding the right property that's going to help you achieve those financial goals into your retirement.
So what sort of age bracket would you recommend for people to start looking at self-managed funds?
Yeah, look, there's never really going to be a specific age. Obviously, the earlier is always going to be better with something to do with property. It is a long-term investment. Superannuation, it's not something that you necessarily want to be using for flipping properties and chasing short-term goals. In saying that, you would want to hit some key metrics of regards to the balance of the fund for where it to be viable from a fee perspective. Rule of thumb, $250,000 to $300,000 is really a break-even point where we see some of the fixed costs of an SMSF be pretty much on par with what that you would expect to pay inside an industry fund or a retail fund.
So the average age, do you think, of people coming to talk to you is what, 30s?
Yeah, so a typical client self-managed super fund would see mid-30s through to retirement age and everything in between, I guess you say.
Okay, yep. That's really interesting. It's something often asked of us, and some people are very unsure about it. So at the end of the day, thank you for explaining that. Luke, it's great. And I think the most important thing is to ensure that you do get the correct information from a financial advisor planner from the get-go, because you can make mistakes and it's so much easier not to make them. So why should you want to? At the end of the day. Look, we're planning to catch up with Luke again in a few weeks, and we've got a couple of subjects that we're planning to have a chat with him about. The first one is property investment versus stock market, which I'm sure will interest a lot of people, and also personal life and income protection insurance. Really a hot spot of interest for a lot of people. So we look forward to seeing you again. Luke. Thank you for your time. Definitely. And if you've got any questions that you'd like us to put to Luke, please let us know and we'll pass them on, and I'm sure you'll be able to answer them for you. Thanks, Luke. Take care now. Bye.